Welcome to Kitco News. I'm Niels Christensen. We're continuing our coverage of the Mines and Money Online Connect Virtual Mining Conference, and joining me today is the CEO of the world's largest mining company, Tom Palmer, CEO of Newmont Corp. Tom, it's a pleasure to have you on. Thank you very much for joining us today.
Thanks, Niels. Good to see you.
I'm really excited to talk to you. I mean, I covered your Q2 reports, what you guys call solid earnings. You generated $388 million in cash flow. I'm sort of wondering what's needed for this trend to continue. And do you see this trend continuing of sort of solid growth?
Yeah, thanks, Neil. The second quarter for us was a quarter in which there was a big response to the COVID pandemic, and we moved 5 of our operations through that second quarter into care and maintenance, and then safely back up out of care and maintenance with the full support of our workforce and, importantly, the local communities and governments. So we're back up. Our 12 operations and our 2 joint ventures as we start the second half of this year are all up and running under those strict COVID protocols. So we are very well positioned for a strong second half of this year. We've guided to 6 million ounces of gold and another 1 million gold equivalent ounces from the copper, silver, lead and zinc, and all-in sustaining costs of about $1,015 an ounce. So second half of this year, we are very well positioned for a strong finish to the year.
How has the gold price affected you guys? I mean, we've seen gold hit all-time highs, and that actually really helped you guys with your earnings because you did have lower production due to COVID-related activity and stuff like that. So how important is the gold price for your guys' operation?
What our focus on at Newmont is that we are profitable at the bottom of the price cycle. So we manage our business assuming gold's at $1,200. And when we think about growth for us, it's about growing margins at that $1,200 mark. It's also about growing mine life. So that when we manage our business that way, that leverages us very nicely to gold price. So for every $100 increase in gold price above that base plan assumption that we have, we generate an extra $400 million of free cash flow a year. Or put another way, if current spot prices were to be maintained for the next 5 years, we'd generate $19 billion of free cash flow. So our focus is on running the business and ensuring we've got a sustainable, profitable business at the bottom of the price cycle and then leverage nicely to gold price.
It's interesting. You say, if gold prices stay where they are for the next 5 years. Do you think that's possible? I mean, do you think, we hover around 2000 then?
I think there's the fundamentals that were sitting before the pandemic came along. There were some fundamentals that were supporting supply and demand fundamentals, the flow into ETFs, the growing middle class in China and in India. Some real fundamentals that were supporting gold moving into a new band of maybe the $1,300 to the $1,400 mark. And then you're seeing quite a bit of volatility over the top of that. Now what we're seeing with the impacts of the pandemic, the level of fiscal and monetary stimulus going into economies, the risk, I think, with the Northern Hemisphere winter of a resurgence in this virus and the ambiguity around this virus, there is a lot of signals that say that gold prices could stay at elevated levels with quite a bit of volatility for some time to come. So that's nice for our business, but it's very much now is the time to really focus on that rigor and discipline of ensuring that you run a business at the bottom of the price cycle. And Niels, for me, I grew up in a mining family. I'm 4th generation mining. I grew up in small mining towns. I've lived through the experience of commodity price cycles. I've seen the impact of companies that don't run their businesses to be sustainable and profitable at the bottom of the price cycle, the impact that has on communities and families. So it's personal for me as well as a key part of the Newmont way is that we run our business with that discipline at the bottom of the price cycle.
Okay, so talking about discipline then, you're generating cash flow. Where do you put that money? I mean, and where do you see the best value? Is it in the ground, building up your pipeline? Is it giving back to shareholders? Where's the value for you?
So current gold prices, our capital allocation philosophy doesn't change. It is about investing back in organic growth and our project pipeline. We've got a great project pipeline. It's about continuing to strengthen and maintain an investment-grade balance sheet, and then it's returns to shareholders. And our focus there is about ensuring that in having those discussions and debates, which we're having right now, given the cash we're going to generate at current gold prices, is how do we return to shareholders in a way that's rewarding our long-term shareholders and attracting and then retaining new long-term shareholders who are going to stay with us for the long term, as I say. And if you look at what Newmont's track record is, we have started this year raised our dividend 79% to $1 per share annualised. That's the highest yielding dividend of any of the North American gold miners. And in the last 18 months, we've returned $2 billion to shareholders, and that is more than the next 8 gold companies combined. So a very strong track record of returns to shareholders. We're having the debates now in terms of how best to return that cash we're going to generate to shareholders as we move forward.
And then let production, obviously, like you say, putting stuff, putting money back into the ground to build your pipeline. You are the largest gold producer in the world, and everybody sort of talks about we're not replacing the ounces that we're producing. So I'm sort of wondering, as you're building your pipeline, are you worried about peak gold? I mean, what are your thoughts on sort of resources out there?
Not worried at all when it comes to Newmont's portfolio. We've got a production profile that can sustain more than 6 million ounces a year for the next decade, underpinned by 8 world-class assets in our portfolio. We've got 3 near-term development projects. One's in execution in Tanami Expansion 2. 2 are nearing full funds in Ahafo North and Yanacocha Sulfides. And then we've got an exploration program and an exploration team that is the best in the industry, that is working at our existing operations to convert endowment to inventory, to resource to reserve, to sustain that production profile through this decade. And then we have at early stages in our organic project pipeline, projects that we can bring forward towards the end of this decade and through next decade to sustain that production profile through the 2030s and into the 2040s. So the great thing about the Newmont story is what we have organically that can sustain our performance over the very long term. And that's something that is quite unique in the gold space.
Just really quickly, more about production. Obviously, COVID has upset everything. And I'm sort of wondering, how does this impact your production going forward? I mean, I know you're saying at the start of this, looking for a strong second half. Are you worried about, further shutdowns? Should investors be preparing themselves for lower production as, mines have to maybe reduce staff to meet COVID safety standards and stuff like that?
Niels, we made a lot of those changes way back in March when we responded to the pandemic. So irrespective of whether it was an operation we put into care and maintenance or an operation that's continued operating all the way through, we moved a whole bunch of people off mine sites and out of offices around the world and started to use the technology that's available to us to work remotely. One of the main reasons we did that was to protect people's health and safety, both our workforce and those local communities, and to reduce the risk of infection. So we have at our mine sites today only the critical numbers of people that you need to operate and maintain mining equipment, processing plants, and those critical environmental management systems. What that allows you to do then is manage that risk of the spread of the infection, manage your social distancing, managing your cleaning regimes, manage your screening of people coming onto site, and so on and so forth. So all of those protocols remain in place. We're leveraging technology to be able to continue to support our operations virtually or remotely. And those protocols allow us to continue to operate. It allows us, as the virus in different parts of the world is circulating through the community, we can manage within the fence of our operations to ensure that that infection doesn't cross the boundary. And that gives us confidence that we can continue to run our operations and maintain the guidance that we're provided.
Fantastic. One last question, and I think this is an important topic that the mining sector needs to talk about. ESG, environmental social governance. Newmont is recognized actually as one of the best mining companies in the world when it comes to ESG. You're in the Dow for 5 years in a running, the Dow Sustainability Index, the top miner. How important, why is this a big philosophy for Newmont?
Niels, from our perspective, it is absolutely fundamental that strong environmental, social and governance performance is essential, is foundational for sustainable business performance. And it's fundamental to Newmont because we learnt our lessons the hard way. Newmont is a company that's been around, it's our 100th year. So been around a very long time. And about 30 years ago, a bit over 30 years ago, we left the shores of the United States and simultaneously went into Peru as the Shining Path was still in power, went into Indonesia with the Suharto regime still in place, and went into Uzbekistan just after the fall of the Soviet Union. It made Newmont as an organisation, but we also learnt some very hard lessons in terms of how we engage with the communities, environmental performance, governance, so on and so forth. And those lessons from decades ago are embedded in our organisation's policies, our standards and our systems. And it's underpinned by robust governance. In ESG, the G should be at the front end. Without robust governance, you will not get sustainable environmental performance or sustainable social performance. And at Newmont, we have had an independent board and a non-executive chair for 15 years with robust audit committee, safety and sustainability committee, and a leadership development and compensation committee that hold management accountable to meet the standards that we set to ensure our systems are healthy and are performing as we expect them to do. And one of the key things about it being part of Newmont's DNA over now several decades is that in the leadership development and compensation committee, we as management are held to account on our succession plans and our leadership development plans, that leaders in Newmont are only promoted on the basis of sound environmental and social performance. And if you look at the CEO role, Wayne Murdy 20 years ago, to Richard O'Brien, to Gary Goldberg, and now to me, as internal successors in the CEO role, have all been linked to a board that's making decisions about those successes on the basis of environmental and social performance. And that's what underpins robust performance. And that is why it's part of Newmont's DNA and why we're very proud to call ourselves leaders in our industry when it comes to ESG performance.
Do you think that's what's going to separate the miners in this? As we start to see generalist investors come into the market, I mean, is that what really going to separate the companies that have good ESG and environmental standards to those that don't?
Yes, Niels, it is absolutely going to separate mining companies from those that do and those that don't. Some of the meetings that I have with shareholders, the only conversation is ESG, and that's becoming more and more prevalent. And I think as we move forward through the years ahead, it's going to become more and more important, particularly, as you say, with generalist investors that we're looking to come in to our stock and stay in our industry for the long term. Robust, sustainable ESG performance is going to be a key criteria for them.
Tom, this has been a fantastic conversation. Thank you very much. Congratulations on your Q2 performance. I look to see what happens in the rest of the year. But thank you very much for joining us today.
Great. Thanks, Niels.
Thank you for watching Kitco News. For the latest in the precious metals markets, go to kitco.com. Stay safe and stay healthy.